Hello, good morning. It's Friday the 17th. I'm FX Plu and this is the market brief. So the UK got a warning shot over unemployment yesterday. We lost 700,000 jobs in the 3 months to May, and this is a reminder of the issues facing the economy. Where unemployment benefits are set to soar, tax receipts are also dropping like a stone. So it's a tricky old situation for Sunak to sort out, and that's even if we avoid a second wave in the autumn. Then, of course, we've got the Huawei row, which runs the risk of exploding into a full-on trade war. As we've seen with the US, China's not exactly shy of retaliation. The government said yesterday that the decision wasn't political, but that rather smacks of desperation and backtracking. So far, China's only used rhetoric, but they're unlikely to take it all lying down, so we can expect a more practical retaliation in due course. Brace yourself, whatever it is, it's likely to sting a bit. Sterling's reaction to the unemployment data was pretty limited, and we closed slightly lower around the 125.50 mark against the dollar yesterday. Keep an eye out for a break below 125 though, as this may be where the market abandons any hope of the sterling rally continuing, so we may see that drop like a stone. Over in the US, Q2 earnings season is in full swing. There's a bit of concern over the lack of bank earnings though, and increases in loan loss provisions. These provisions have jumped over 40% from Q1, but that provision element is really just semantics, as it's actually banking terminology for how much they expect to lose in bad loans. That 40% represents over $35 billion, so there may be trouble ahead. It looks like there's trouble ahead for Trump too. Continuing his row with Fauci, he blames science for how the pandemic has been handled, but his efforts to reopen the economy are beginning to damage his hopes for re-election. Yes, the traditional red cap supporters are still lapping up his chat, but those in the centre who were originally swayed by his business-centric methods are leaving in their droves. Joe Biden has a strong lead in the poll, and dear old Donald is running out of time to recover. Do you think he can do it? Let's have a quick Friday straw poll. Trump or Biden for the win? Drop a name in the comments below, please. Over in the Eurozone, the ECB held firm following 4 months of adding to their QE efforts. Lagarde pronounced it was time for the bank to take stock and review what can be done in a more practical sense going forwards. That throws the hot potato of the Pandemic Relief Fund back to the EU heads of state. They meet in a virtual summit today, but it's more likely that they'll continue to ignore it all and hope it all goes away. Euro dollar couldn't hold on to the gains over the 114 mark. We saw that drop back to 113.75 yesterday as the euro continues to be driven more by changing dollar risk appetite than anything else. Right, that's it from me. Caps off a good week. Hope you've had a good one and enjoy the weekend ahead. Join me again on Monday.
If you do not have a clue, then just tweet through and ask FX Blue.